the zone, and well, spring is kind of coming to an end, and we know that that's usually when houses get all hot and crazy, but the real estate market here in the DMV is always hot and crazy. And of course, we've got Sotheby's own here with us, Corey Burr from the Burr Group, from Sotheby's International Realty, the vice president here. Now, let's talk about the current, if you will, of realty in the DMV market, because it seems as though these rates are going up. People are kind of waiting a little bit longer, but it's still a good market.
It's still a good market, but people are skittish. The Fed has primarily done what they set out to do 3 years ago. Interest rates are now in the mid-sixes to upper sixes, but our market is, we've got days on the market much higher, we've got inventory much higher, we've got people nervous about Doge, and there are just a lot of heavy cross currents going on right now. But even in the face of all of that, prices are staying stable, which is truly miraculous.
But what I'm hearing is that there's a little wiggle room, if you will, to maybe not have to outbid somebody to put more cash than what the house is on the market for.
That's true, particularly after the second weekend. The first weekend is a seller's market because everyone who's in that price range, in that location, for that kind of house is going to come out of the woodwork. And if everything's lined up right, they're going to bid on it. So we're still seeing a few, not as many, but a few multiple offer situations. But after the first or second weekend, things will slow down, and then there's going to be more negotiating room for buyers.
Okay, I'm old enough to remember that just a couple weeks ago you told me 21 days is where that shift is. Now you're saying the second weekend, so what I'm hearing is like on day 8, now things start to shift.
It can for certain houses.
So what about this market? Because a lot of people say, well, this market is a little insular. You've got the federal workforce, you've got people who will never leave DC, and yet to your point, you've got the Doge cuts and so many people who are skittish, uncertain about their career, their future. Are you seeing a little bit of a shift in that?
We're just seeing skittishness on the part of sellers and of buyers. And this is just in the face of high interest rates, particularly the weight of that. 54% of the people in America still have an interest rate on their mortgage of under 4%. So to trade that in for something at 6.5% is a really hard decision.
Yeah.
And so the situation just needs to be perfect for them to buy a house.
All right. So what would you suggest to people who are on the looking, or for people who are thinking about selling? What would be your main tips on both sides?
So for buyers, they've got to stay in the game. They've got to continue to look at property every weekend and be the expert in the price range and the location where they've been targeting. For sellers, they've got to understand that the market is completely different than the 4 years of the COVID market, and that they've got to be very reasonably priced, and they've also got to be willing to negotiate the contract and negotiate the inspection contingency.
All right, and let's talk about the potential that maybe you don't sell, maybe you're not finding a buyer. Is this a rental market, or are people looking for homes in the rental markets? Of course, we know a lot of people flocked back to the cities. They got into the big apartments, the condos with the amenities. What about for homes?
Well, some sellers are choosing to rent out their property, but not everybody has the luxury of doing that. They need the equity from their house in order to go to the next property. Also, they might be relocating altogether and never moving back to the DMV, in which case it kind of becomes an albatross around their necks. Being a landlord is a really tough endeavor. So it's really best to try to sell it wherever the market is and capture that weaker market wherever they're going.
Okay. All right. So we got the tips moving forward. I know the spring market is historically where things have been really crazy and there's a lot of movement. What do you predict into the summer? Well,
personally, I think that the inflation numbers are going to be coming down. We've had good inflation numbers for the last couple of months. Also, the jobs numbers are moderating a little bit. So I think that the Fed is going to see more of an opening to reduce their Fed funds rate. And that sort of sets the tone for the mortgage
interest rates.
Yes.
Yeah, and that's when people, even a half percentage point at this point, would probably motivate a lot of people to get back out there.
And that's what we need right now for the market, lower rates.
We'll see what happens. Corey, always so good to see you here to give us the latest on the real estate market here in the D.C. area. Keep us posted.
Thank you.